Hi everyone, Rini here, and welcome to my channel. So unfortunately, these past couple of days have been an absolute disaster for our portfolios, mine included of course. Let's dive into the charts to see what's going on, answer some key questions that you may have, and more importantly, what do we do moving forward? And let's dive in. So if you're looking at Bitcoin on a weekly time frame, what you can see here is we finally broke through this particular support level right here of around $41,000. Once we finally broke through it and closed below it on a daily time frame, unfortunately, it sent out a cascade of sell-offs because a lot of people have probably thought that this is finally the bear market. And since we broke this particular support, then as you can see, there has been a mad rush to sell off what they can across Bitcoin and all of the altcoins, including, of course, our favorite gaming cryptos. So there are a couple of questions that you may have. One is, are we in a bear market? The answer to that is unfortunately a little bit complicated. Let me explain what I mean. The reason why it's complicated is because if we look at the past cycles, it is no longer as straightforward as we have a bear market right here, and then suddenly we have a bull market right here. If we look at the past cycle, after a bear market right here of around 6 months, we had a rally, then a slight correction before a final moonshot to the end. And if we compare that to the previous cycle, then it was pretty much a lot of people were buying Bitcoin and then there's a straight up rally right here before a subsequent correction. This very simplistic price action was a result of Bitcoin having low market cap. So basically, there was Bitcoin and nobody else. So unfortunately, this cycle, what's happening if you notice, is we have now had multiple occurrences of, the bear market here, we tried to rally, but actually we got rejected and we had a quick bearish phase right here before a subsequent rally, then a 3-month correction, then a subsequent rally, and then finally now a 3-month correction. This is actually perfectly normal. And once again, this is a result of institutional adoption when a lot of players are now coming into the space, not just for Bitcoin, but the entire asset class. What you now have is lengthening cycles because there are more players in the picture who can dictate whether to buy or sell. Now that this happened though, and now that our altcoins are pretty much devastated from this particular capitulation right here, what do we do then moving forward? Well, it's very easy for me to say, buy the dip, buy the dip. To be perfectly honest with you, a lot of us here are probably very, very short of fun. Because of the excitement of the crypto space, majority of our investments are most likely already in here, and we have already bought through whatever we need to buy. So one of the first things that we can do, of course, is evaluate your investments. Which projects did you actually invest in? Are they the ones that are long-term and sustainable? What I mean by that is, 3 years down the line, will they still be here? Or are they particular games that kind of have no hope in the future and you were only investing in them because you were thinking this is a way to get quick profit? The ones that do not have any long-term vision, unfortunately, will not last as long during this downtrend. What I mean by that is there are certain projects that once Bitcoin recovers, whether it's 3 months, 6 months, 9 months down the line, these projects unfortunately will also never recover and you are pretty much stuck in that price action. Otherwise, if you believe in the particular project, here's one thing that you can do to catch a falling knife in the crypto space. And I'm going to use THG as an example for this. One of the good things about the capitulation, it makes your investment call easier because everything is pretty much down. So whatever money that you've put in, regardless of how small it will be, you will eventually start to contribute to your portfolio having a healthier position down here below. So let's say you have an average price right here. And because of this particular capitulation, and you know that this is a long-term project that's not going to go away, what's going to happen is each of these small positions that you put in here will eventually lead to them having large multiples in the future, but it will happen years down the line, or it will happen much, much later in the year, for example, or maybe 2023, who knows? It depends on when the markets will recover. But one of the things that you can do moving forward is establish a risk threshold. What a risk threshold is it is the price point where if your particular asset continues to be below that price, you will keep DCAing into it. So for example, if I take THG, we can set the risk threshold of THG as $3. Why $3? That is because this is my support zone right here. The fact that we've broken through this particular initial run-up of THG right here, then $3 is my support zone. What that means is as long as the price is below the $3 range, then I will continue to DCA whatever small amounts that I can muster here. What about my average price right here? So for example, let's assume that the average price is this. Then I'll just leave this alone. This is just my hodl bag pretty much. This is my moon bag so that when the markets recover, I won't capitulate. Instead, I'll just hodl through this particular downtrend. There's no need to sell it off expecting the price to go lower, blah, 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 blah. Just hodl through this. Once the staking mechanisms come into play, then just stake it and just leave it alone for a while. But instead, you now focus on what's in front of you, which is this is the perfect time to establish a risk threshold where as long as the price is below here, then you continue to invest. But once the price breaks out of this particular rut, so for example, it is above $3, then you stop investing in this particular project. Why is that? That is because it has finally crossed above your risk threshold. This is the minimum price that you will tell yourself that once it hits it, you will stop investing and you will enjoy the gains. One personal example that I can give you is during the May to July correction, Solana was one of my investments right here. I had a risk threshold of around $30. So as long as Solana would go below the $30 range right here, every time I have to DCA into the project, then I would use the candle opportunities basically. So when Solana dips below 30, you buy. When Solana dips below 30, you buy. Or when Solana keeps remaining below 30, I bought. Now that Solana has pretty much blasted past the $30 range, I let the winners ride. So once it has crossed through this $30 range right here, then just enjoy the ride. This is what I mean by a risk threshold. It is a price point that you establish by yourself. You can use the charts to sort of help tell you where it is. Or in the coming days, we can actually establish risk thresholds for certain projects moving forward. If you like that video, hit like and subscribe, hit the notification bell. Also, let me know what you think in the comments. Do you want me to make a video about your favorite gaming crypto? Be a Patreon subscriber so you can request for it. Being a Patreon subscriber helps keep the channel sponsor, shill, and Moonboy free. Take care everyone. Bye-bye.